Good morning, everybody. How's everybody doing? I hope everything's good. I'm Yohay Elam, Forex Crunch Market Movers podcast, doing the show as usual for FX Street. Today we have, like last time, a busy show with quite a few things. We'll cover recent developments in markets, discuss various charts and levels. Our currency of the week is dollar yen, mostly because of a big double feature next week. But we'll also do a preview for this week's key event. That's the Bank of England with the build-up, and of course a preview for next week's events. As always, your questions are most welcome. If you cannot see the chat box alongside the screen, please go to the address here, tlk.io/fxstreet-forex-live-video. Okay, so what's going on in markets in general? Well, stock markets are falling, not every day, not all the time, but most of the time, okay? A more gloomy mood, and this helps the US dollar. So there's an inverse correlation between stocks and the US dollar. The US dollar finds itself more and more of a safe haven currency. Now, this was not supposed to be the case. Why? Because chances for a Fed rate hike in September, that means in 1 week from now, okay, at September 21st, are fading. The last comment before the Fed went on this quiet period that it always has came from Brainard, a voting member of the Fed, and she was very dovish. She did not provide any hawkish surprise. That was Monday. Data wasn't that good, okay? So in general, we are seeing the dollar strengthening. Of course, this morning, as I speak, we're seeing some kind of reversal of this move. For instance, here we have euro dollar ticking a bit higher. Also, other currencies. We'll cover currencies more in depth later on, but strengthening mostly, or solely at the moment against the Japanese yen, which is also a safe haven currency, but the general trend remains a stronger US dollar, okay? So this looks to me more like a correction. Okay, other things in the news. Last week on Thursday, we had the ECB. The ECB, like other central banks perhaps, is providing less information than it used to. So Mario Draghi did hint of changes to QE. Of course, the QE program is set to end in 6 months from now, and the details might change, but absolutely no details. He left us, he didn't give us any number. Also, the forecast didn't change that much. The euro at the beginning went up, but then went down. All in all, euro dollar remains frustrating, well entrenched in range. Okay. Oil inventories fell last week a lot, by over 12 million barrels. This helped oil prices, but this didn't last too long. Why? Because there are worries about global growth. Which kind of worries? That the growth of demand will fade out, that supply is still too strong despite all the talk about curbing production, freezing, cutting, you name it. And so worse economic prospects, fall in oil prices, and this of course also goes hand in hand with the stronger US dollar. Another central bank that came out last week was the Bank of Canada. They were dovish, they were relatively cautious. No rate cuts coming soon, but they joined sort of the worried camp, okay? And Mark Carney, which will appear also this week, he'll be heard this week, the governor of the Bank of England. He had a testimony last week and he defended the Bank of England's actions, remained dovish, remained worried about the economy, despite some better signs that we've seen for the month of July. Okay, now this week he has the rate decision, and we'll dive into that shortly. Okay, other pieces of data that came out. So if we had in the UK, we had positive figures for the month of July immediately post-Brexit. The skies didn't fall. There was good weather, retail sales were up, jobless claims were down, inflation was moving higher, but things probably worsened, at least in the releases that came out recently in September. So industrial output, that actually is a figure for the month of July, just came out late. It was a small miss. More worrying, perhaps inflation, the Bank of England's target, that was a miss, okay? And I suspect that this might be a series of weaker data. So today we have jobless claims for August, unemployment rate for July in the UK. Tomorrow we have retail sales and of course the rate decision by the BoE. So perhaps data for July was good, but now we'll see bigger effect of Brexit or just a negative rebound in data in the UK. So I think summer is over for the pound. In Japan, final GDP actually came out better than expected. We have also focus on the yen later on. The final GDP came out at 0.2 quarter over quarter instead of flat, and that's good news. In China, trade balance showed a rise in imports, first time I think in 21 months. So that's also good news. Fiscal and monetary stimulus in China is having its effect. Also, industrial output came out better than expected, 6.3% instead of 6.2. Not a big shocker, but again, things are looking better in China. So if China is looking better, why is the world gloomy? My suspicion is that central banks, that markets have somewhat lost some of the faith in central banks. The Bank of Japan might be reaching the end of the road. The Fed's, delaying of rate hikes shows it's not confident, but they also aren't offering any stimulus. The the European Central Bank is not keen on doing more, sort of also reached the end of the road. And so that's why I think that markets are in need. They don't want fiscal, they want the easy money from the monetary, from the central banks, okay? Let's continue. See if we have any questions. Good morning, Sinatra. Good morning, Ramon. Good morning, Luca. Good morning, everybody. So before we continue, we have some questions here. Dollar yen is also my currency of the week. Where did they hide all that oil? Well, there were rumors in the past that there's lots of Iranian oil stranded in ships all over the world. We know that oil inventories are rising, and I'm also asking where can they store all this oil? But apparently, if there's a will, there's a way. Okay. And Sinatra also says here, I expect today's UK data to reflect some of the light-headed positive mood after Brexit, but also show some warning signals. Yeah, or as you just said, yeah, I think we'll have a settling down, a sort of hangover. Okay, but anyway, inflation was weaker, and let's see if it also reaches employment and retail sales, which has the most significant impact. Let's continue. I have a few more data pieces to cover, and then we'll reach the charts. So Canadian unemployment came out better than expected, 26.2 thousand jobs gained, but the unemployment rate went up to 7%. So a bit mixed, not that bad. German zoo sentiment missed, hardly growing, remained at 0.5. That's a worrying sign. We'll have to wait for IFO, which is Germany's #1 think tank, but also this figure is not that positive. Okay, now on to the charts. So this is our technical session for, well, quite a few currency pairs and finally oil prices. So euro dollar remains relatively frustrating. Not that all of you are very surprised if you're watching markets and you focus only on euro dollar. Not too much going on. Okay, so I still think that even though 112 has been the recent low, 111.90 is the post-Brexit high, and for me, line of support, followed by 111.30 and more importantly 110.70. On the top side, we have, well, limited resistance here at 112.40, much higher resistance at 113.35, which was a previous line. Anyway, as you can see, the ranges are very narrow. So in recent days, it's been somewhere between 112 to 112.60. Again, I would like to see a wider range also here. Let's continue with euro dollar. I'll just mention that low support is at 109.10 in case of a huge earthquake in currencies, and high resistance 114.20. Pound dollar cable, much more interesting as always. 132.26 this morning, recovering from the lows. Next line of resistance, 132.50. Support here at 131.60, and not for the first time, but now it also proved itself once again. Further resistance, 133.60, and 134.80 is the post-Brexit line of resistance. Of course, the low number is 130. Next major pair is dollar yen. So here we are seeing the strength of the US dollar. So we did see safe haven flows, dollar yen falling under 102, but recovering quite nicely. Maybe the Japanese yen is not that much of a safe haven in the wake of this US dollar strength. And now, but it is working against it. On the other side, when we are seeing a recovery in other currencies against the US dollar, we're seeing quite a big sell-off in the yen. I think that this shows a lot of weakness in dollar yen, and that we could see further gains in the pair, assuming, well, it also depends on the Bank of Japan. Anyway, 104 is the next level of resistance, followed by another round level of 105. 103, also a round number, somewhat weaker resistance. To the downside, we have 101.50. And between these lines, between 101.50 and 103, I think it's a big mess. 100.80 is the next line of support. These are the technical levels for dollar yen. I'm surprised to see long weeks of high volatility in dollar yen, like pound dollar. And on the other hand, we have euro dollar not moving anywhere fast. Dollar CAD. So currently the pair is falling because the US dollar is seeing some kind of recovery. But look at the trend. It looks quite different in recent days. So the pair has quite pretty technical behavior. 128.30 was a line of support, worked very well. Then we had a climb up and a settling down above 129.10. Then a rise above 130. All of these remain relevant lines of support. 130.80 and 131.40 are the next lines. 132.20 is the top side line of resistance in case the US dollar strengthens once again, and then 133.10. Okay, so quite a few lines that sort of seem to work quite nicely again and again. Aussie dollar, sort of the weakest link in commodity currencies in recent days, but currently also under recovery. Found support very nicely at 74.40, and now trying to recapture 75, very round level. At the beginning, it managed to bounce off this level, move to higher ground, but then it fell once again. So let's say that 75.80 is some kind of resistance here on the top side, followed by 76.60 and 77.40. Below, we have 74.40, 73.75, and the round number of 73. Kiwi dollar, quite a ride on the Kiwi as well. So many other currencies to trade which are not euro dollar. So we had quite a rise, almost reaching the very round level of 75, but sort of a double top there, and then we fell back down. 74, a round number, still worth mentioning. 73.20, not as strong as it used to be. It worked as very stubborn resistance. And 72.40 is support. Below that, we have the round number of 72. Okay, that's Kiwi dollar. Now let's move to currency pairs I like a bit less. Dollar Swiss, under the 98 level. 98 still works as resistance, followed by 98.50. 97, the round number, and 96.40 are lines of support. Why don't I like Swiss franc pairs? Because the SNB intervenes. Tomorrow we'll get a reminder also about that. And they sort of have a floor, unofficial floor around 108, sometimes 107.50 on Euro Swiss. That's the currency pair they care about most. We're currently at higher ground. Perhaps we're seeing some intervention ahead of the rate decision tomorrow. 109.67 is the current level. 110, I would say, is line of resistance, followed by 111.20. Euro pound. Currency which is of interest to so many people, so many Brits living here in Barcelona. So we reached a high there just above 85.30, and we're sliding back down again under 85. Okay, 85 is sort of an important line. 84.20 further support. I should amend this line on the chart. And further support at 83. 50, followed by 83, high resistance at 87. Not the technical play here in Euro Pound is not as good as it used to be. All right. Euro Yen currently just under 116. Moving to the top side, all in all, we are seeing some range trading here. 113.80 remains strong support to the downside. 116, I would say, some kind of resistance, not that strong. 114.50 is lower support within this range. Okay, I know that not many traders like it, even though markets are interested in this pair, but this is a very interesting and very volatile pair. Pound yen, 136.40 at the moment. 137.20 is the line that we've seen recently. Don't know why my lines have disappeared from this chart. Let's add them once again. Anyway, so we have this swing high was also some, a resistance line when 37.10, a better approximation, 134.40 on the downside seen quite recently. The wider ranges in pound yen are 128 and 140, and this wide range of 1200 pips can be seen once again shortly if we have some action from both central banks. Okay, so it's a relatively short period of calm in pound yen. And oil prices, once again, very volatile. We did see a big drawdown in inventories. That was why we've seen oil prices rise, but then reports of slowing demand, seeing the pair going down. I think I mentioned this before, but the 45 level remains sort of a magnet for the pair. It tends to bounce out around here, basically halfway between 40 and 50 bucks on WTI crude oil. This morning, relatively stable, but I'm sure we'll move higher. Today we have oil inventories. Okay, so that concludes the technical segment. Let's see if we have any questions and move to the next. Yeah, so I see here discussion. Yeah, so it's a good choice of word, hangover. That's regarding the the British data. I call it a champagne party in July. Yeah, good weather. Ramon accidentally started. Frozen picture. Okay, it is working. Okay, Lucas says bonds rippling lower, but Fed watch outs just 15% for September. Bond traders just following LIBOR short term and not the Fed. Yeah, big mess out there. Yen went up with stocks, now going down with stocks correlation. That's out of the window. Yeah, recalibration period, as Sinatra says. Right, so and RMB now entering the SDR system. Yeah, it's an interesting period. Usually when you have changes in trends, changes in correlations, recalibration period, the yen is not as safe as it used to be. Doesn't have this clear correlation with stocks, which it usually has. Another change we're seeing is US dollar becoming more of a safe haven. And that, yeah, we're seeing some changes in bond prices. So many think that bond prices, after a long period, as safe haven assets, German bonds, US treasuries, Japanese JGBs, all supported by central banks, all in high demand. They reached such high levels. I mean, bonds reach high levels, yields reached low levels, especially in the Eurozone. So investors thought, okay, these are the safest havens. Perhaps they're better than stocks if you think stocks are falling. But on the other hand, maybe it's better to store the money in cash if we have a negative yield. Or maybe we'll just take profit on the money we already made on it. So we're seeing this cascading event of some kind of sell-offs in bonds. I think it also provides an opportunity, for example, for the ECB to jump back in. So if the yield falls, if the yield goes up, in case of German bonds, above the minus 40 level, which is the negative deposit rate, the limit of the ECB has more eligible bonds to buy. Okay, so it's sort of a pendulum swing. I think that if the mood remains negative, bonds will still thrive. That means yields will continue going lower. Let's continue to the next segment. Okay, so let's just look once again at the questions. Possible go long on pound Yeah, now asks Adrian. Possible if the Bank of England is hawkish, but I don't think. I think it'll be relatively dovish. We'll talk about actually both currencies we're focusing soon, just now. Okay, so now begin a segment. Sorry, we will not begin a segment. We'll just cover a few more events coming up in during this week. So we have just after the show UK employment data at 8:30 GMT. Okay, remember jobless claims. That's called claimant count change. That's for the month of August. That means it's fresher data. In July, it was excellent. Jobless claims actually fell. And we'll also get the first unemployment rate and the first wage data for post-Brexit. That means for July. That's lagging data. I suspect it'll be weaker. I suspect that now we'll have a series of disappointments after we had a series of beats for July. Okay. And that's basically the main event for this morning. At 2:30 GMT, we have crude oil inventories. Let's see if we have a bounce build up after the big drawdown. Oil has become sensitive. Markets are sensitive to oil. Inverse correlation between oil and the US dollar. And at the 11:15 GMT, we have the New Zealand GDP. I think it'll be quite positive. The economy is looking good. Milk prices are rising. Anyway, it's the GDP figure for Q2, which is way back in the rearview mirror. Tomorrow, very, very, very busy day. Hard to underestimate. Let's begin from the top. Early in the morning, at night, we have the Australian jobs report, 1:30 GMT. That's, of course, always important for Australia. At 7:30 GMT, we have the Swiss quarterly rate decision, the LIBOR decision. The interest rate is expected to remain at a negative -75. And they will continue their pledge to intervene in foreign exchange markets necessary to weaken the unjustifiably strong Swiss franc. Okay. Another key UK figure comes out tomorrow at 8:30 GMT. That's retail sales. Okay. So we had a big fall in retail sales in June, blamed on weather pre-Brexit, then a big bounce in July, thanks to weather, not Brexit. Okay, let's see if now we have something perhaps related to Brexit or related to long-term things, not just the sun or the clouds. And at 11 GMT, we have the UK rate decision. We'll touch on that more in detail later on. If you still believe there's going to be a rate hike or hope for a rate hike in the United States next week, retail sales, the key US figure, consumption is the name of the game in the US economy. It's coming tomorrow at 12:30 GMT. Last report was disappointing. Okay. And then we have also at the same time producer prices and the current account, overshadowed by retail sales, no doubt. At 1:15 tomorrow, we have industrial output. Let's watch because services are more important than manufacturing in the United States of America. And on Friday, relatively light day, so maybe time to digest inflation figures, but also we have, I think it's missing here. We have, we have inflation figures coming out in US at 12:30 GMT. And sorry for this, for the last moment edition, but consumer confidence at 2 GMT doesn't always have a good correlation with actual retail sales, but always moves markets, and it's the last figure for Friday. But I think retail sales is the most important release this week. Okay, so if the big week began relatively slowly, now it's going on an acceleration mode. Okay, before we move to the next segment, I'll also look once again at questions. So Lucas says, to sum up, what's this market's about for now? Put on a YouTube video. I'm not sure. Let's see if it works. I need $1. Yeah. Sung by Aloe Black. Thanks. It's a nice song. Yeah, they need $1. Thanks, Luca. Yeah, there's no need for a euro, not for a yen, but I need $1. Okay. Liquidity scramble for the US dollar as CBs tighten the taps. Yeah. Central banks, the European Central Bank, the BoE, the Bank of Japan are all talking about fiscal stimulus. It means they have reached the end of the road. That means scramble for the world's most liquid currency, and that's the greenback. Okay, let's move to focus on dollar yen, currency of the week. I know it's Valeria Bednarek's favorite. Usually this currency pair suffers from long periods of extreme boredom and then sheer madness when they talk about foreign exchange being like working on an air traffic tower. Dollar yen is the best example, but this is not what we're seeing now. We're seeing volatility on a daily basis. We found dollar yen went all the way down to 100, and then it bounced off the lows, made quite an impressive rise, reached crossed 104 at some point. I'm sure the Bank of Japan was happy to see that, but the Japanese yen, despite its activity in recent days, still remains a safe haven currency. Okay, don't underestimate it. An interesting thing that's going on next week is the double feature on Wednesday, September 21st. The Bank of Japan convenes early in the morning, of course, morning, afternoon in Japan, and then the Federal Reserve meets in the evening. That means noon in the United States, afternoon there. So it's a big day for dollar yen next Wednesday. The Bank of Japan announced last time that it concludes that it'll do an assessment of its QE program, sort of review, think about it, everything. But what does it mean? It means they're worried it doesn't work and they'll stop it, or say it's not enough, or just assess how it's gone so far and continue with the same policy. We really don't know. We didn't get any clear hints. All we had is speculation. That means nothing is priced in. Okay, what I think I've said it many times here, is that with better growth now, what I said many times is that with the US elections coming up, any extreme easing by the Bank of Japan would be seen as intervention, would be seen as monetization by the Bank of Japan, would be seen as helicopter money, and it's not good for politics. It sort of, Donald Trump could say it's we're getting a bad deal from Japan, and they don't want to focus on them, of course. Also, Clinton adopted sort of not so friendly environment to trade. And another thing is that we had recently an upwards revision of growth. So there's no need to rush. I think that's what's gonna happen, okay? And mind you, the timetable, Monday, it's a holiday in Japan. That means even if there's speculation, even if some newspapers come out with any kind of news reports about the Bank of Japan's actions during the weekend or on Monday, markets are closed in Tokyo. That means liquidity will be thin and we might see crazy movements on dollar yen. Wednesday, again, BOJ in the morning, Fed in the evening, and Thursday, just as markets still try to understand what the Fed does, it's another holiday in Japan. So if it makes its decision at 6 GMT, and Tokyo is supposed to open a few hours later, but it doesn't, it's a holiday. So again, lots of lack of liquidity. That means we could have bigger action. To talk more about the yen, let's just look at the chart of dollar yen. Again, let's zoom out to the daily chart perhaps to get the bigger picture. We already had in the technical session. So all in all, big fall in dollar yen from the highs because the yen is a safe haven and it's in high demand. Interventions, negative rates, nothing helped to curb demand for the safe haven currency. But after a long period of falls, after this big move towards 100, here we have the post-Brexit low, 99, a move back up, another attempt in the summer to reach higher ground, 107.50, and then another fall, but finally found a bounce. You can see that it's all part of the same trend, but I think we've sort of balanced out. We're now more in range trading, and the downtrend maybe has ended. Anyway, 105, 106.40, 107.50 is the extreme end, and 100, 99 is the extreme low. Okay, so this concludes our segment about dollar yen. Let's see again if we have any questions. Downward channel, just testing the ceiling, you think? Well, you can see it as a downwards channel. I understand, but I think we're balancing out. If we have a few more days like this that we're moving a bit higher or stuck in the same levels, I think, well, let's see. If it's downwards channel, we should be challenging lower ground. If we look at the lows, I think we've seen a higher low here in late August, early September, higher than the post-Brexit low. Again, you can say post-Brexit was a swing, was a rare event, but anyway, I'm not sure. I mean, yes, the yen is a safe haven, but some of the correlation has been lost. So we might see a change here, or at least a stabilization period, the end of the downtrend. But yeah, we need, of course, more evidence. Okay. Trump, another comment here by Luca. Previous comment was by Sinatra. So Lucas says Trump wanted to announce he'll build a wall around Cuba and get the Castros to pay for it. A closer advisor wanted in Cuba is actually an island. Disaster averted. Yeah. I don't know if it's a joke or real, but I can believe anything if it's attributed to Trump because he talks so much nonsense. So you really can never know. Okay. Let's continue now with central banker of August, at least, of the month, or maybe of the year, Mark Carney. So this is a preview of the Bank of England. Here's a picture of Mark Carney with his medal. He finished the London Marathon at a great time, but we're not here to talk about that. This is the second, this is the third rate decision since Brexit. In July, they told us, wait for August. In August, they announced a lot. They announced the cut of the interest rate from 0.5 to 0.25, 60 billion more in regular QE of government bonds, 10 billion in corporate bonds, another program called TFS to help the real economy, and a few other liquidity provisions. In a recent testimony in Parliament, the Bank of England defended its actions, okay? When sort of Carney said, and also his colleagues, but mostly Carney, he's the face. Remember, Mark Carney and his colleagues warned everybody about the implications of Brexit, even hinted about recession, and said they're just doing their job. Once the vote came out, they said they would support the economy, and eventually, as I said, they announced a huge package. Now, recent figures have not been that terrible. He says, and they told him, look, you're exaggerating beforehand, and look, we're vindicated, we're right. It's not a disaster. They blamed him. So he said, no, it's thanks to me. Not in these words, of course, but thanks to our action, financial markets are more stable, but there's still risk. He was still dovish, he's still worried, okay? That was his recent appearance. Tomorrow, there's no appearance. There's just the decision, no changes expected. The next move will probably come in November, when they have another quarterly inflation report. And but there are the meeting minutes, which is a very long document, which allows Carney and his colleagues to express what they think about the economy. You also have the voting pattern, how many of the 9 members voted to leave policy unchanged, and how many wanted to change it. I believe we'll have a 9-0-0 unanimous decision, but we'll see about that. Anyway, let's go back to the slide about the Bank of England. Towards the Bank of England, of course, we have the jobs report today and retail sales tomorrow. So the political debate is short-term disaster averted, but is it thanks to the Bank of England, says Carney, or despite the Bank of England, say politicians, especially those supporting Brexit? November cut on the cards. Also, the government does not provide details. The UK government, led by Theresa May and also Chancellor Philip Hammond, they did not provide any details about Brexit, neither did the Brexit ministers. The 3 Brexiteers, Liam Fox, Boris Johnson, and David Davis. No details about Brexit. No details also about potential fiscal stimulus to come in the autumn statement expected in November or December. I believe also the Bank of England And also, like the ECB will follow with lack of details. They'll keep us in the dark and then make a big move in November. Okay, so that's what we're expecting from the Bank of England. Let's also, what we did for the yen, let's look at the wider range for pound dollar. Just a second. As my charts load, of course, we had a big fall. Here it is. On June 24th, Brexit, just before we had the vote, 150. Afterwards, boom, we fell. Lowest ground, 127.90. Since then, we moved higher. I mark the 134.80 level as key resistance. The pair attempted to move above. All in all, since then, we've seen range trading. We've seen this low of 128.40, which is above the lowest level, and where the pound first bounced when we learned that there's going to be a new government sooner than later, and another downfall later on. All in all, range trading. Will the Bank of England break the range tomorrow? Probably not. It'll probably have to wait for the Fed. But I think we could see another blow to the pound due to an ongoing dovish message, and also due to the figures, which might be worse than expected, but we never know. We still haven't had the figures. We'll know them soon enough. Okay, let's see if we have more questions before the next segment. Okay, Lucas said that thing about Trump is a joke. Yeah, it sounds like a joke. I would expect Trump to know that Cuba is an island, but he didn't know so many other things and seemed unprepared in so many other instances that you never know. Sinatra says there is some bearish divergence on dollar yen. Hourly chart might take another drop to 102. Let's take a look at that. Dollar yen. So this is the hourly chart of dollar yen. Well, I see only an upwards move, but very nice. Like 2 steps forward, 1 step backwards. But in the past day or so. Let's see if this continues. All right. Anyway, let's look back at your comment. Bearish PA on 15-minute chart. Okay, let's move to 15 minutes. Yeah, looks like a bit more of a nasty U-shaped turnaround. Okay, so watch out for that. Maybe we're seeing the reversal after long days of 2 steps forward, 1 step backward. Sort of very nice corrections here in dollar yen. Okay. Now let's continue with preview for next week's events. Okay. I know I have this. That's on Wednesday. Sorry for that. Anyway, on Tuesday we have the Eurozone PMIs. Monday, nothing of importance, as aforementioned. We have the holiday in Japan, echoes from the recent data, more speculation about the Fed, no data and lots of speculation, some housing data, but coming on Tuesday from the US, just sort of to pass the time towards the Fed. Big Wednesday. And of course, we have the show on Wednesday. We'll talk about everything. Japanese rate decision and the Fed decision is, Fed decision and fresh forecasts, the dot plot, the works. We'll preview that in detail. And then Janet Yellen's press conference at 6:30 GMT. It might be a snoozer. She tries not to rock the boat, but never know what you can say. Anyway, it's 3 events in one. It's a bigger Fed decision. They have once a quarter, it's with forecasts and the press conference, and the other event is without anything. On Thursday, we'll have the Fed fallout, of course. The so much hype, so much expectations towards this decision. So markets will unwind regardless of the decision. Also, US existing home sales, rate decision in New Zealand for those trading the Kiwi. And on Friday, it'll be important for those trading the loonie. Canadian retail sales and CPI, always a double feature in Canada, but quieter for markets. Maybe the final thoughts about the Fed. So I would say that next week it's mostly about the Fed, but the Bank of Japan might try to steal the show. In the past, they did not steal the show. Even if the Fed does nothing, okay? Even if the Fed does not, even if they cancel the meeting, okay? Anything that happens, markets are so hyped towards this event. If you watch financial television, like Bloomberg, CNBC, things like that, if you read, my site, Forex Crunch, FX Street, it's all about the Fed. Any kind of speculation moves markets. Let's remind you that the chances for rate hike, according to the CME Group FedWatch, are only standing at about 15%. I think it's correct because I think we just didn't get enough hawkish statements, and the data hasn't been good, okay? Data, retail sales, non-farm payrolls, ISM, non-manufacturing PMI, it hasn't been good enough, okay? Inflation is not going anywhere fast, and the Fed is usually dovish. Also, add the elections coming up. All in all, to sum up the preview for next week, no rate hike from the Fed, okay? If we do have a rate hike, of course, it'll be a huge surprise, bullish for the dollar. If we look forward to December, that's a whole different ballgame. That's after the US elections. You might get more positive data from now, also thanks to the Fed support. And but that's also far away. Chances can fall by then, of course. Anyway, for December, not much going on. Okay, so that's preview for next week. Again, not only the Fed, but they really, really, really stand out. Let's see more questions. Oh, I was looking at the wrong chart. I was looking at dollar yen beforehand. Sorry, Sinatra. Let's look at the pound soon. Read other comments. Lucas says, I took all yen pairs off my trading board for next week. What we are going to see there next week is going to be sheer madness. Yeah. Sheer madness, BOJ and the Fed. Senator says, looking to trade that madness at low leverage. Okay, that's a smart approach, of course. High volatility, low leverage. Lucas says, probably a spike up and then another dramatic fall as dollar yen reacts badly to whatever peanuts BOJ comes up with and breaks below 100. Yeah, the Bank of Japan throughout this year disappointed markets, creating expectations and doing nothing. Sometimes I must say that it's not their fault, but anyway, that's what happens. Bank of Japan has declared 95 is their intervention level. Are you sure? I mean, did they really say that, or we just? I mean, they usually don't comment specifically on levels, but when the pair does reach a certain level, they begin saying we're watching FX closely. Yeah, too much volatility, things like that. Lucas says also, good luck, Frankie. Yeah, you're gonna have fun there. Yeah, it's gonna be fun. If you're trading those events, do trade with low leverage and trade carefully and responsibly. Okay, let's just take another look at pound dollar. Oh, we're seeing this fall in dollar yen extending that you were mentioning beforehand. Pound dollar. Yeah, it's also here a turn to the downside. So this recovery of the US dollar, recovery, I mean, against the US dollar, this is not going anywhere fast. The pound is under. Also here we have a U-shaped turnaround in cable. Okay. So this is the wrap up for the live market open for September 14th. It's a Wednesday, 1 week to go to the Fed decision. All in all, markets are relatively subdued. Stock markets are mostly falling. This is supportive for the US dollar. Oil is falling as well, things that go hand in hand in many cases, but the dollar yen is not business as usual. I would say the yen safe haven is not working exactly as expected. We're seeing weakness in the yen. Fed expectations are lower. The last chance to speak. The last word came from Governor Brainard, a permanent voter, as dove. She did not go hawkish. She remained dovish. Also, their central banks are worried. Draghi hints of changes to key, but absolutely no details. He was dovish. He was worried. Oil inventories did fall, but then oil didn't hold up because we were expecting lower demand. The Bank of Canada was dovish. Carney was dovish with the Bank of England ahead of the rate decision. Okay. We should watch out for today employment data in the United Kingdom. I suspect we'll have after a winning streak in July, we'll have a losing streak in August. Now we get data for August. We had a miss on inflation. We might get today we have employment, and tomorrow we have retail sales and the Bank of England's decision. Also watch out for oil because it has a good correlation, inverse correlation with the dollar. Extremely busy day tomorrow. Watch out for, if you're trading the Aussie, you'll need to stay awake at night. The Swiss National Bank, not expected to surprise us, but well, after they made the mother of all surprises on January 15th, 2015, you can never know. Retail sales in the UK, even though we have the Bank of England later on, this is a very important release. Bank of England not expected to rock the boat, expected to remain dovish and cut in November. Retail sales, big event in, well, if you still want to see a rate hike in the US, we'll need a big positive surprise, bigly, as Donald Trump says. Also watch out for PPI, current account industrial output. And tomorrow we have inflation figures and consumer sentiment in the US, okay? So it's focused on the US and the UK in the next few days. A quick look at charts before we head off. So we did see some correction in the generally stronger dollar trend, but this didn't last. Well, we're seeing a reversal. That means the dollar strengthening once again, not against all currencies, of course, not against the yen, but we're seeing it re-strengthen against the euro, 122.22, 112.22, 112.40, and 111.90 are the range lines. Pound dollar just under 132, 132.50, and 131.60 are lines to watch. Dollar yen now falling. That means yen still works somewhat as a safe haven, well, just above support there at 103. Further resistance 104. Dollar CAD. The Canadian dollar is not as strong as it used to be. Above support at 131.40 and 132.20 is the next level. Australian dollar battling, made an attempt to break back above 75, but this attempt just failed as we speak. So the correction against the dollar is reversing, support 74.40, and the Kiwi, one of the strongest currencies of late, cannot withstand the strength of the US dollar. It did correct. It is still up on the day, but not going anywhere fast. Anyway, remember, euro dollar remains frustrating. It has short periods of nice, good vibes, but in long periods of boredom. It is the new dollar yen. Well, the dollar yen is quite impressive. Okay, before we head off, a few more comments, questions. Sinatra says, looking into my Bloomberg, they will say by autumn that they will intervene at 90. Yeah, I think they'll verbally intervene if we drop under 100, and then maybe provide strong rhetoric if we fall further. Ed, hi Ed, where are the links for your older sessions this week? FX Rate Navigation is not impressed. Navigation is designed to look good. Yeah, looks like it's made for mobile or tablet. Yeah, well, Ed, I have a session only once a week nowadays, so this time you cannot blame the design, blame me. It's one session on Wednesday, and video clips from this session, of course, We have more video clips now, about 5 or 6. They're available soon afterwards on FX Street and also on Forex Crunch. Okay, another comment from Luca about the yen. 95 is also 61.8 of the entire average move. I would think that dollar yen would be a good value for long term around the 1995 area. Yeah, makes sense because we can have intervention, more easing, more fiscal stimulus perhaps. Gee, stocks can't even bounce with oil. Careful with risk on trades. We haven't seen the end of risk off yet. I agree. I think this gloom that reached also Bloomberg and the gloom NBC. Now we haven't seen the end of it. What we've seen now was a correction, and perhaps we have further falls to come. Okay, so thank you very much, everybody, for coming. It's been fun. Really love having all those questions. Do follow the live coverages also of FX Street. If I'm not mistaken, the next one is tomorrow at the Bank of England. And join the show next week. So that's it. Thank you very much. And wish everybody a safe and successful day. And see you next time. Ciao. Bye-bye.